I'm Diane Rosagnola, here in LA for REIT World 2019, NAREIT's annual conference. I'm here with Jerry Barag, CEO of CatchMark Timber Trust. Hi, Jerry.
Good morning.
How would you describe conditions in your southern markets, both in terms of harvest volumes and pulpwood pricing?
So conditions have been somewhat divergent, and they have persisted that way for some time now, but the divergence is actually getting larger. So we track about 15 separate markets across the U.S. South, and of those 15 markets, we think 5 of them are healthy, robust, and conditions are expanding for the better. 5 of them are about neutral, and then 5 of them are still seeing a significant oversupply of timber. As a result, our portfolio construction has really been focused since our IPO on those 5 healthy markets, and that's exclusively where CatchMark is invested. So for the last several years, we have been very successful at expanding our harvests, as well as we've seen modest price appreciation for all those markets that we participate in.
And how have your joint ventures been performing, including CatchMark's T joint venture?
So the joint ventures have done very well for us. There are 2 basically. The first one is Dawsonville Bluffs. Dawsonville Bluffs, almost all of the property was transacted and sold during the last quarter. So we have almost completely round-tripped that joint venture in about a 3-year period of time. It was originally expected that it would go for 7 to 10 years, so we've been very happy with the results there, and they've been very profitable for us. The T joint venture, which is the larger of the 2 by quite a bit, is really just in the point of getting it under our wings and optimizing what's there. The good news is that operating conditions in Texas this year have been very, very good. The property itself is operating better than we expected it to. It's achieving operations that are higher than our original underwriting and our expectations, and we think it bodes well for what the future of that investment and joint venture is going to be as well.
And what are your expectations regarding the single-family housing market heading into 2020?
So the single-family housing market looks pretty steady for 2020. The combination of deferred entry into the market by a lot of millennial buyers that normally demographically would have been in the market or would have made a home buying decision still has a lot of support for fundamental home ownership, and low interest rates have clearly been supporting the continued purchase of new housing. What's interesting is for our markets, because so much of what we do is tied to lumber usage, we have actually now seen that demand for lumber in the repair and remodel market has actually now exceeded the new home building market, which has never happened before in history. So fundamentally things are changing in the United States demographically, as well as how people think about their home purchasing decision. But overall it has been a mildly upward trajectory in terms of overall housing activity, and we expect that fundamentally in 2020 it's just going to remain steady.
Jerry, thank you so much for talking with us today.
My pleasure.
For more from REIT World 2019, visit NAREIT's website, REIT.com.